So we can, yeah, it's all right. As so last week we looked at introduction to accounting. We we look at introduction to accounting. So whereby we look at the definition, what's the meaning of fundamentals of accounting, and the meaning of accounting, and the meaning of bookkeeping, the role, and we looked at the accounting cycle. So today let's look at double entry accounting. So when we talk of a double entry accounting, what comes in our mind? A double entry accounting is a system of accounting in which every transaction is recorded twice, once as debit and once as credit. So this double, as you hear the word double, it's like recording something two times, that is twice. So you record one as debit and one as credit. So this ensures that the accounting equation is always balanced. Last time we look at the accounting equation, how we can be able to balance it. So here on double entry accounting, we are supposed to ensure that the accounting equation is always balanced. So let's look at double entry accounting, the rules of debits and credits. So the rules of debit and credit, under debit side, they say recorded on the left. Debit, it's recorded on the left of a ledger sheet. So debit, it's always recorded on the left. Increase in debit, increase an asset account or decrease an equity or liability accounts. So debit side, when we are recording a transaction in a debit side, we record an asset that is, if that statement increases assets, we record it under debit side. If it decreases an equity, we record it under debit side. If it decreases liability, we record it under debit side. If it decreases, if there is decrease in revenue, we record under debit side. If there is increase in expenses account, we record under debit side. So that is the rule for debits. So we look at the rules for credit. We record on the right of the ledger sheet. So you have to record your credit, or it's recorded at the right of the ledger sheet. So we have a one decrease, it decrease an asset, decrease an asset account. If an asset is decreasing, it means we record it under credit side. Increase, it increase an equity. It means if an equity, if there is increase in an equity, we record under credit side. And then increase liability. It means if there is an increase in a liability, we record under credit side. So we have increase revenue. If it is an increase in revenue, we record under credit side. We look at decrease expense. It decrease expense account. So if there is an decrease in an expense account, we record under credit. We record under credit side. So let's look at an example of it, illustration. Here we have the elements. So we have asset. So it means an debit in increase side and we have decrease side. So an asset, it increased, which we recorded under debit side, and then it decreased, which we record it as credit side. So we look at liabilities. We credit liabilities when there is an increase, and then we debit liabilities when there is a decrease. So we look at capital. We credit capital when there is an increase, and we debit capital when there is a decrease. So we look at drawings. We debit drawings when there is an increase, and we credit drawings when there is a decrease. So we look at incomes or revenue. We credit income or revenue when there is an increase, and we debit revenue when there is a decrease. So expenses. We debit expenses when there is an increase, and we credit expenses when there is a decrease. So that's about double entry accounting. So let's look at journal entries and posting. Journal entries accounts are the formal records of financial transactions. These are formal records of financial transactions. How you record them? They are recorded in journal, which is chronological records of all transactions. Journal entries are then posted to general ledgers, which is more permanent record of transactions. So after making the journal entries, you then post them to the general ledger. Then journals are some of the original books in accounting. This concept is guided by the following increase and reduction as follows. So this one is almost the same as the one that we have been looking at, the rules for double entry. So that we have the types of accounts and we have the increase or decrease. So an asset, we have decrease in it. When an asset, when there is increase in an asset, we put under debit side. So it's the same as the one that we have looked under double entry accounting, the rules. So let's look at example. For example, we have a company. ABC company makes a sale worthy 400 USD by check. So a check, it can be referred as to bank. When you're creating an account, you call it a bank. So the bookkeeper of a company ABCD will credit the sales with 400 USD and debit the bank with 400. So ABCD makes a sale. It means there is an increase in sales. Makes a sale by bank, which means the bank is receiving. The bank is receiving 400. So when we go back to our rule, they say when an asset, when there is an increase in an asset, we record under debit side. So we look at this. When we look at this, bank, they say if ABCD company makes a sale worthy this by check, it means the bank is receiving. It sold goods and then he made the sale of 400 USD, which means that sales was he received the amount by bank, which is 400 USD, which means the bank is the one increasing. So we have to debit the bank account and we credit stock because he's solding out those goods, and the company is giving out the goods, which means when the company gives out the good, it receives money. So the money is coming in form of check, and then the goods are going out. So they say when an asset, because bank is an example of an asset. Last time we look at the examples of an asset. So the introduction to accounting, it is very keen. You have to master all those examples of assets because they will help you in journal entries. When you're calculating, the journal entries, when you're putting that information, the introduction to accounting, it is very keen. For example, you have to know all the examples of assets and all the examples of liabilities and equity. They have to be you have to know before doing, because this will help you to identify an asset, to identify a liability, and you will relate it to our rule. So we have we debit bank account, which is 400, and we credit stock or sales account. So for example, we can use sales or we can use stock. When you're not given the name of that good, you either use stock or you can use sales, because you're making sales into the company. All those are your goods that you're selling. That's why we call them stock. So a stock is an example of asset. So that's why we credit stock, because it is reducing, it is decreasing. That's why we credit stock. This means that an asset, bank, was increased by 400 USD, and again an asset, stock, reduced by 400 USD. So that is example 1. Yes. So let's look at example 2. A company ABCD paid electricity bill worth 100 USD by cash. So in the company book, electricity bill, it's an expense, will be debited, and cash will be credited, because a company paid electricity, which means electricity is gaining. There is an increase in electricity because electricity is the one taking our cash of the business. So here in these journal entries, we look at the side of the company only, the side of the business only. So it means when a business is losing, so a business here was losing 100 USD to electricity. So he paid using cash. So which mean here the accounts that we have electricity and we have cash. Those are the accounts. First of all, when you're dealing with journal entries, you have to identify which accounts do you have. You name them down. Here we have electricity bill and we have cash. So the second thing that you will do, you will look at which account is receiving and which account is losing. In other words, which account is increasing, which account is decreasing. So when we look at a company ABCD paid electricity bill worth 100 USD by cash. So it means the company gave out its cash, which means the company was losing cash. And this cash, it is what? It is an example of an asset. And when an asset, when there is a decrease in an asset, we credit. When there is an increase in an asset, we debit. So when we look at an electricity bill, it is an example of expenses. And when there is an increase in expenses, we will put it under debit side. That's why we said debit electricity bill expenses 100 and credit electricity expenses 100. So our journal entry has balance, because here we have to balance our entries. This indicates that capital has decreased due to electricity expenses by 100 and an asset cash is reduced by 100. So this note, we looked at it, which says a debit is always entered on the left side of an account and a credit is always entered on the right hand of an account. So we have examples of journals. One, we have purchases journals. This journal is used to recall all purchases made on credit only. So purchases, what are purchases? Those are the goods that you buy, like when you buy a good on credit, or when you buy a good, like you're purchasing. So we have purchase journal. So every good that you will purchase on credit, you will record it under purchase journal. So we have sales journal. A sales journal records credit sales only. These are the goods that you use, like sold goods on credit. These are the goods that you sell to your customer on credit. So we record them under sales journal. So we have return outwards journal. It records goods returned by the business to supplier for the reason that they are either tampered with, are not of kind ordered for, or damaged, or are in excess of the amount ordered. So this return outwards journal, it means it records the good returned by the business. When the business order goods from its suppliers, so after bringing them to the company, they realize those goods have an issue, or maybe they may be damaged, or they are in excess of the amount ordered. Either they have been tampered with, so or maybe they are not the goods that they have ordered for. They take those goods back. So those goods are called return outwards. So you record it under return outwards journal. So we look at return inwards journal. This journal is used to record all the goods that are returned to the business by the customers because they were not kind ordered for, or were in excess. So this return inwards, it means the customer came to the company and bought goods. Then when they realize that those goods have maybe neither, they may be having damage, or they are in excess of the amount ordered, or they are not the kind of goods that they want, or they are not they are expired, they may decide to bring those goods back to the company. So when they bring those goods back to the company, you record it under return inwards journal. So we'll look at general journal. All other transactions not falling into any of the above journals are recorded in this journal. So when we look at general journal, which we are going to concentrate more on it, all other transactions not falling into any of the above journals are recorded in this journal. In the general journal, the following details relating to the transactions are included. So in general, here we can make only one side, but when we look at general entry, when we look at general journal, we have the format that we follow. So we have to write the date, we write the name of the account to be debited, and then the name of the account to be credited, and a brief narration or description of the transaction as instructed below. So it means here, when you're given as in your financial records, you have to write the date of the goods received, or maybe all the goods that you bought, the date. So you name the amount to be debited, then the name of the account to be credited, and then a brief narration or description of transactions. So we look at posting. When all transactions have been entered into a specific journals, they are then entered into their respective accounts in the ledgers. In a process referred to as posting, an account is placed where all details relating to particular assets, liability, or capital is recorded. There could be an account for motor vehicle, other for buildings, another one for specific creditor, or yet other separate accounts for each. So we have accounts can be divided into two. We have personal accounts and we have impersonal accounts. So when we look at personal accounts, are accounts dealing with customers and suppliers. So these personal accounts, it only deals with customers and the suppliers. For example, we have the debtors and we have the creditors. In personal accounts, on the other hand, can furtherly be divided into a real account used for recording possessions like land, motor vehicle, buildings, furniture, and fitting. Nominal account used for recording capital, income, and expenses. So we have two under personal account. So all accounts are prepared in T format. So all these accounts, we prepare them in T format. So that's give us that's generally referred to as T accounts. The T accounts have two sides, the debit side on the left and the credit side on the right of the accounts. So this one takes us back to the rule of double entry that we have seen. Every transaction in a business affects two accounts. One of the account is debited while the other is credited by the same amount, giving a rise to double entry bookkeeping. For example, each entry recorded in journal, there will be a debit and a credit entry in two separate accounts in the ledgers. We have to note that a debit is always entered on the left side of an account, and a credit is always entered on the right side of an account. So this is the example. We have the T format, which we have a debit. We have debit at the left hand side. Then we have credit at the right hand side. So once a journal entry has been recorded, it is posted to the journal ledger. So after recording the journal entry, you post it to the general ledgers. To post a general ledger, the amount of debit is entered on the debit side of the appropriate account in a general ledger, and the amount of the credit is entered on the credit side of appropriate account. So let's look at this example. Prepare the information for ABCD company for the month of April 2022 using journal entry system. So we are going to use journal entry system to prepare this. So the following information was acquired from the book of ABCD Limited for the amount of April, for the month, sorry, of April. So we have the date and then we have the details. We have started the business with, so we are going to look at this in shillings, in Uganda shillings. Started the business with shillings 1 million cash and then 2 million cash at bank. Then this company bought stock shillings, this using check, and paid rent this, sold goods worth this cash by cash, paid for trading license by 50, and then sold goods worth this one. So we are going to look at yes, sorry about that. Yeah, so we can go on. So let's start with started the business with 1 million Uganda shillings cash, and then 2 million at bank. So here it means, let's draw a table. We are going to insert. Yes, let's start with this example. So when we are looking at general entry, we have you have to write a heading, a title. So you have to write the name of your company, then you write what you're preparing, and then you write the month. Which month are you preparing for? So for example, here they've given us the month. They always give you the month. And they've given us the month. We are looking at the month of April, and then we are preparing journal entry, and then the company's name is ABC Company Limited. So we are going to write ABC Company Limited. That is the first thing you have to do when you are dealing with journal entry. You have to write the name of the country, the name of the company, and then we are going what are you preparing? So we are preparing journal entry. Journal entry. Journal entry system. And then we are preparing for which month? So we are preparing for the month of April. In our question, they have given us the month of April. So always the journal entry, you have to put the date. You have to follow the order. You start with the company's name, then you put what you're preparing and then the date. So you cannot start with the date, then you come with what you're preparing. It has to be in order. The company's name, and then what you're preparing, and then the date. Our date is for the month of April. 2022. So yes, yeah. So you put the date. After you put the date, my courage not yeah. So for the month of April 2022. So here you have to put the date. Remember, on the here we looked at how we are supposed to generate it. So we have the date. You start with the date, then you put the details. Then you put the volume. So we have DR, which is a debit side. Then we have CR. This is the form, the short form of a credit, and the short form of credit. So when we look at our example, they are saying started the business with 1 million cash and at bank. So you have one thing when you have to start with. You start with identifying the accounts. Which accounts are here in these sentences? So when you're given your sentence like this, you have to make sure you identify those accounts. So here when you start a business, what do you use to start up a business? So you ask yourself, what do you use? And then when you're starting a business, you use capital. So here they are saying started the business, which means they use this business, ABC company, it started a business with um, 1 million cash and then 2 million at bank, which means he had the capital of 1 million in cash, and then he has a capital of 2 million at bank. So to get the amount of capital, it means you add the cash plus the bank to get the amount of capital. So here we have three accounts. We have cash, we have bank, and we have capital. So you put the date, which is first, which is 1st of April. 1st of April. Then details. In details, you write the account name. In details, you write the account name. So we have cash account, cash account. So we have bank account, and then we have capital. Capital account. So you go back to your question. It says started the business with cash. It means you had a cash. The business had cash. So that is an increase in cash. You have the cash. And then you have what? You have capital. Sorry, you have bank. So it means you have that bank, you have that money at bank, which is 2 million. So it means cash, it is an example of an asset. And you go back to your rule, of a double entry. When an asset increase, we put under debit side. So here we have one. So you can decide to put the three zeros up. You can decide to put the three zeros up and here. So it debits on our debit side, we are having 1 million. We debit cash, and then we debit bank, which is 3 million. And then to get the amount of capital, you add your cash and your bank to get capital. It was 2 million. So when you add, you come up with 3 million. So it means ABC Company Limited has started our business with 3 million. So that was we are done with statement one. So in our that we have to write the description. So you write the description in the column of details. So you write started the business with cash and bank. So you put and say you have to write this statement. Started the business with cash and bank. So you write under details. Started business with cash and bank. So that one you're done with 1st April. Then we go to April. Bought stock shillings, bought stock of 500,000 using a check. Check is the same as bank. So the date, so we are going to be using the same table. So this is A. So here we have a bank. We have bank. And then we have cash. We have stock. We come back to our question. Bought stock 500,000 using a check. So you bought goods. It means here your stock is receiving, and then the bank is reducing. The stock is increasing because the company, here we look at the company. The company bought stock. It bought stock or goods using the check. So it means it used the check to buy those. So the company is receiving the goods. So it means that the stock is increasing and then the bank is losing. So how much? Which is 500. So at when an asset is losing, we credit. When an asset is reducing or decreasing, we credit. So we are going to put here 500. And then this stock is an asset. So stock is receiving. So it means stock is gaining. We put it under debit side, which is 500. So you write you have to write the description. So under description, the question, this statement will give you what to write under your description. So under here we have bought stock using cash, using check. So here we are going to say in our description, bought stock using check. So that's what you're going to write in our description. So we go to example, we go to point to 10th of April. Paid rent 100 using cash. Paid rent 100 using cash. So it means here we have to identify which accounts we have. We have rent account and we have cash account. So you paid rent. It means the rent is receiving. So a rent is an example of an expense. And then you use the cash to pay the rent. It means you're losing, the company is losing cash. So it means the cash, we are going to credit cash because the cash is reducing, and we are going to debit rent because rent is gaining or it's increasing. A rent is an example of expenses. So you're going to do the same. We have rent, and then we have cash. The rent is gaining 100, increasing by 100, and then the cash, it's reducing by 100. So you put under your description, you put paid rent using cash. That is under your description. So we go to 11th April. Sold goods worthy 300,000 shillings. So here, when the company sold goods using cash, so it means the company is giving out the goods. It means the stock is losing. Stock is losing, and then cash is receiving. Because when you sell goods, the company gets the money, and then the stock reduces. So here we have two accounts. We have a stock account and we have a cash account. So here what we have to note is that when they give you sold goods, when they have not mentioned the name of the good, you have to use stock. But when they use the name of the good, you don't use stock. When you're given the name of the good, you don't use stock. You use that specific name of the good. For example, when they say sold, when they say bought motor vehicle. So in your account, you will have motor vehicle account. But here they have not indicated the name of the good, so you have to use stock. So we have a stock account and we have cash account. The date is 11th of April. We have cash, and then we have stock account. So the amount is 300,000. So the cash is receiving, it is increasing. So you put under debit side, which is 300,000. Then we have our stock is the one losing, which is 300,000. Then you have to write the details, that your description. Under your description, you will say sold goods worthy, sorry, sold goods by cash. That will be under your description. So we go to 15th April 2022. Paid for trading license. Paid for a trading license, cash. So it means you paid for the trading license using your cash, the cash for the company. And then a trading license, that is an example of it falls under expenses. So it means here trading license, it is gaining. So here we have trading license account and then cash account, which is losing. We have a trading account. Then you use the short form, and then the cash, which is 250, and then here 250. So when you come back to our question, we have a paid for trading license. So in your description, you write paid for trading license using cash. That is your description. So we go to 20th. Sold goods worthy cash. So it means here is the stock is losing. The stock is decreasing. So it means you sold the goods and you receive cash. So it means here cash is gaining. Here we have our cash, and then we have our stock. The amount, $100. We have 100 and we have 100. So you indicate the date. So you put your description by saying sold goods using cash. So here we look at 22nd April, bought more stock, shillings this using a check. So here the company bought more goods. It means those are our stock because they have not specified the name of the stock, which type of goods is the company buying. So we have to use stock. So bought more stock, 600 using a check. A check, it is the same as bank. So here the bank is losing, the bank is decreasing, and then the stock is increasing. So here we have a stock, then we have bank. So you indicate the amount, which is 600. And then here we have 600. So it means our stock is gaining 600 and then our bank is losing 600. Then we have 29th of April, sold goods worthy 200 on credit. So when you sell good on credit, it means um, you have data. Those are data. Like you so those are the people that we demand. They are, the people that the company demands. They are called data. They are the data to the company. So when you sold goods on credit, it means you gave out the goods on credit. So we have the accounts that we have. We have stock account and we have debtors account. So it means our stock is reducing and then the debtors is increasing because that those debtors are taking the goods and the goods of the company are reducing because later on those debtors will have to pay back. So here we look at stock which is reducing and then debtors increasing. So we have a debtors account. We have debtors, and then we have stock. The amount 200. 200. Then we have 200. So you have to put in your description which says sold goods on credit. That is on your description. Then we have a 30th used 50,000 for personal use. So here you have to identify which accounts are there. So here we have a cash account and we have drawings account. What is drawing? Drawings is the amount used for withdraw for personal use. The amount withdraw for personal use. Those are the drawings. It might be withdrawn by the owner of the business or by the manager for the personal use. For personal use, those are drawings. So here we have drawings and we have cash. So we are going to debit drawings and we credit cash. We have drawings and then here we have cash. $50. 50. 50. So you put your description, used 50 for personal use.